The Isthmus of Panama in Central America, though covering only 75,500 square kilometers, boasts a strategically significant canal. This approximately 80-kilometer-long canal serves as a vital sea route connecting the Pacific and Atlantic Oceans, allowing ships traveling between the east and west coasts of the United States to bypass Cape Horn in South America, shortening their journey by approximately 15,000 kilometers. From 1914 to 1979, the canal was controlled by the United States. After 1979, management of the canal shifted to joint administration between the United States and Panama. It was not until 1999 that Panama finally regained full control of the canal. However, beyond the canal itself, the importance of the ports along the route cannot be underestimated. Our research indicates that 3 ports along the Panama Canal are operated by Chinese companies, 2 of which are managed by Hong Kong's Cheung Kong Group and 1 by a Taiwanese company. However, 2 weeks ago, Panama suddenly accused Cheung Kong of failing to follow legal procedures when signing the agreement and requested a court ruling that the contract was unconstitutional. If the court upholds this appeal, the Panamanian government would have the power to forcibly reclaim 2 major ports operated by Chinese companies. Many believe the United States may be behind this. So why is Panama suddenly planning to reclaim the operating rights of Chinese ports? If so, what impact will this have on China? If you like our video content, please click to subscribe to my YouTube channel so that you can receive all our latest video content. Now, let's get into today's topic. Panama, located at the narrowest point of the Central American Isthmus, is home to the world-famous Panama Canal. Approximately 180 maritime routes traverse the canal, connecting approximately 170 countries and regions and providing access to nearly 1,920 ports. Data shows that over 10,000 ships transit this vital waterway annually. Last year alone, over 200 million tons of cargo passed through the Panama Canal, with over 2/3 of that cargo originating from or destined for U.S. ports. The U.S. has previously threatened to control this vital global shipping route, even resorting to military means if necessary. Notably, at either end of the Panama Canal lie 2 important ports, Balboa and Cristobal. These 2 ports control a crucial choke point between the Pacific and Atlantic Oceans. Data shows that approximately 6% of global maritime trade passes through the canal, with Chinese merchant ships accounting for 21% of that volume. However, the concession rights to the ports of Balboa and Cristobal are held by Cheung Kong Holdings. Since 1997, Cheung Kong Holdings has invested over $1 billion in equipment upgrades and infrastructure expansion. The introduction of automated loading and unloading systems has increased single-vessel efficiency by 40%, and a new deep-water terminal capable of berthing ultra-large container ships has been built. These improvements have directly increased port throughput by 35%, created approximately 20,000 jobs in Panama, and resulted in a cumulative investment exceeding $1.7 billion. Unexpectedly, just half a month ago, Panama suddenly sued Cheung Kong Group, claiming that the 2 ports were not in line with national interests and attempted to forcibly take back their operating rights. CK Hutchison Holdings had just renewed its 25-year concession for the 2 ports in 2021, extending the contract to 2047. So what exactly happened? In March of this year, news broke that CK Hutchison Holdings planned to sell its 43 ports in 23 countries for $22.8 billion. The most notable of these were the ports of Balboa and Cristobal, located at either end of the Panama Canal. The buyer was none other than BlackRock, the largest U.S. asset management company. As one of the world's largest asset management groups, BlackRock manages over $10 trillion in assets. What a remarkable achievement. Converted into cash, this sum would exceed the combined GDP of Japan and Germany in 2024. However, the deal quickly sparked strong opposition in China. CK Hutchison Holdings is a Hong Kong-based multinational corporation. If the deal went through, the U.S. could use these ports to suppress Chinese shipping trade, such as by raising tolls or even restricting the passage of Chinese cargo ships. Ultimately, due to numerous objections, the transaction, originally scheduled for April 2nd, was not completed as planned and has not been revived to date. After CK Hutchison Holdings terminated its partnership with BlackRock, it immediately issued an open invitation to Chinese investors. The primary target of this invitation was China COSCO Shipping Group, a major state-owned shipping company. However, COSCO Shipping also set clear conditions during the negotiations: a minimum stake of 30% and veto power over operational decisions in Panama ports. According to the latest negotiation framework, the equity distribution plan may be adjusted to BlackRock 45%, COSCO Shipping 30%, and a Swiss shipping company 25%. Initially, the partnership was widely expected to be successful. However, after the news of COSCO Shipping Group taking over the port was announced, Panama's National Audit Office determined that the port contract contained irregularities or improprieties and was not in the national interest. A subsequent report by the Audit Office specifically cited numerous irregularities committed by CK Hutchison during the 2021 port concession renewal, including underpayment of fees and the evasion of approximately $850 million in tax by exploiting tax incentives. According to the indictment, CK Hutchison was supposed to pay the Panamanian government $1.3 billion over the initial 25-year contract period, but only paid approximately $300 million and failed to distribute the agreed 10% net profit to the government. While the full audit report has not yet been released, it has been submitted to the Panama Maritime Authority. If the lawsuit is successful, the possibility of reclaiming the operating rights of the Balboa and Cristobal ports cannot be ruled out. CK Hutchison immediately denied Panama's allegations, emphasizing that its investment and payments fully complied with local laws and contractual requirements. Furthermore, the two parties have never encountered any problems in their 28-year joint port operation. Why are so many problems emerging now? Therefore, it is widely believed that the United States has been trying to suppress China's maritime trade in recent years, attempting to transfer port control from Chinese companies to Western capital through political pressure and other means. So, is the United States involved behind this? As we all know, since taking office, Trump has repeatedly publicly emphasized the need to retake the canal. Just this February, U.S. Secretary of State Rubio even threatened that if Panama did not take steps to end China's influence and control of the Panama Canal, the U.S. would take necessary action. On April 8th, U.S. Secretary of Defense Hegseth visited Panama and publicly promoted the so-called China threat theory. They clearly understand that if the ports of Balboa and Cristobal fall into Chinese hands, it will be much more difficult for the U.S. to suppress Chinese trade. Conversely, if the U.S. controls the Panama Canal, ports, and other facilities, naval forces on both the east and west coasts can quickly support each other, simultaneously controlling the vital trade route between the two oceans. Previously, to contain China, the U.S. has also adopted a similar port control model, imposing various restrictions on China's supply chain logistics and transportation. They have previously pressured Chinese-funded projects such as the Port of Piraeus in Greece and the Royal Port in Malaysia, hoping to disrupt cooperation with Chinese companies and curb Chinese trade. Therefore, it is not impossible that the United States is currently trying to transfer control of Panama's ports from Chinese companies to Western capital in order to curb China's global influence. However, if Panama takes back the port's operating rights, how big will the impact be on China? As mentioned earlier, the Panama Canal connects the Pacific and Atlantic Oceans, allowing merchant ships to travel directly between the two oceans without having to go around Cape Horn, the southernmost tip of South America, saving approximately 15,000 kilometers of travel. However, many may not know that these two ports are also key nodes for China's Belt and Road Initiative in Latin America. Every day, hundreds of giant cargo ships shuttle through this 80-kilometer-long waterway, and 1 out of every 5 ships flies the 5-star red flag. However, in February 2025, the United States announced a comprehensive sanctions proposal targeting the Chinese shipping industry. The proposal would impose port surcharges of up to $1.5 million per voyage on Chinese shipping companies, Chinese-built ships, and any ship owners ordering Chinese-built ships, and would implement a priority shipping for U.S. exports rule. In other words, if the United States fully controls the ports at either end of the canal, Chinese ships could face discriminatory surcharges of up to $1.5 million per voyage, or even have their navigation rights restricted. Based on the number of ships per day, the delivery surcharges alone could cost the Chinese shipping industry an additional $5 million per day. So, how will China respond to this crisis? In fact, whether it is the Panamanian government's lawsuit or the United States' continued trade suppression, China has launched multifaceted layouts. Take the port of Chancay in Peru, for example. This port project, built by COSCO Shipping Group with a $3 billion investment in 2019, is South America's first smart port. Phase 1 of Chancay Port, slated for construction in 2021, features 4 berths with a designed annual throughput of 1 million TEUs. The port's maximum water depth will reach 17.8 meters, sufficient to accommodate the world's largest container ships. Through this port, cargo from South American countries like Brazil and Peru could be delivered directly to Asia. This means Chinese ships can reach Peru directly without transiting the Panama Canal, shortening the journey by 10 days. In July of this year, China and Brazil signed a Memorandum of Understanding on the Two Oceans Railway. This railway, approximately 3,500 kilometers long, stretches from the port area of Rio de Janeiro State, Brazil, in the east to the Chinese-controlled port of Chancay, Peru, in the west. In the future, it may also pass through Bolivia or Colombia. The core goal of the project is to directly connect the Pacific and Atlantic Oceans by land, creating a truly de-Panamanized alternative channel for the export of South American resources. Therefore, while the Panama Canal remains strategically important, China can diversify its risks by diversifying its alternatives if it falls under excessive control by the United States. Meanwhile, China continues to increase its investment in ports in Africa, Asia, and the Middle East. The development of these alternative ports will give China greater initiative and options in global trade and shipping negotiations. To not miss out on our future projects and news updates, please make sure you subscribe to our channel and turn on notifications. We will continue to provide you with more exciting and interesting content.